For this episode, I really wanted to make it friendly, not too complicated. So basically, we're going to talk about capital management. I didn't want to make that too mathematically centered or too opinionated because I know I'm biased as well. But I wanted to talk about it because I know it's really important for everyone here to understand that money shouldn't be burned, and invested money should be limited, very limited in the downside, and scaled in the upside. So, because we talked about this for around 20 days now, I guess you know what I'm talking about and you understand what I'm talking about practically as well, right? However, when you begin trading and let's say you have $100 or you have $1,000 or you have $10,000 or you have $1 million, you know, it can take you 6 months to learn how to trade and to trade well, or it can take you years and years and years. So it depends on how good you are in multiple things, how good you are in understanding the market, how good you are in applying, executing your strategy, how good you are in journaling, and then having feedback from your journal regarding your trading skills, your trading quality, how you execute your trade, how you manage your trades, how you manage, I mean, the whole puzzle that constitutes your trading journey. And all these parts must stick together, must fit within that picture so you can make money, right? However, when you begin and you have $100 and you want to leverage it, for example, or you're risking way more than what you should risk, or you have that bad behavior of holding to your losers and uh, you know cutting your profits when it's a winner, well, you'll burn that money that you have very fast. So what should you do? There are many ways to do that, but you should do it in a way, you should basically trade in a way that no matter how much you lose, first of all, you're here to learn, but no matter how much you lose, you will still never burn all the cash you are dedicating to trade for educational purposes, because you're learning if you're a beginner. And if you apply this well from the start, you'll understand that it's still the same game the whole way. The whole journey is going to be the same game over and over and over and over again, because rules don't change. You shouldn't burn the whole capital. You shouldn't lose too much, and too much will be, for example, hey, I don't want to lose in this period of time that I'm learning. For example, I don't want to lose more than 15%. So you're not gonna risk 1% per trade, because that's 15 trades if you have all of them losers, for example. Of course, you won't have losers, right? It's sometimes at the beginning you might have losers that you don't understand, you might have winners that you don't understand, but at the end of the day, you need to have trades that you understand whether they are losers or winners, so you can manage your risk, hedge your risk, and then profit smartly, consistently by executing your strategy, right? Okay. Now, practically, let's say you have $100 that you want to invest and you're a total beginner, right? And I know even if you're not a complete beginner, or even if you're advanced, you still understand or probably take some key parts of what I'm saying, right? So let's say you're a guy, you don't know what is trading, you say, I want to learn how to trade. You take $100, you put it there, you open a brokerage account, you start trading. Now, you are learning, first of all, I'm assuming that as a smart guy, before trading it, you learn how to read the market, you learn what is your role as a trader, you learn the market participant. You basically went throughout the whole bootcamp before arriving to that 20th episode that is talking about capital management. Okay, so you know what you're doing. Basically, you're not like a complete lost person in that crazy market where you see candles and prices moving around, numbers, 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 you'll probably lose your mind, right? You don't want to do that. So you documented yourself already, and now you're telling to yourself, okay, I have $100. I want to invest it. I want to trade. I want to start trading. You know already where to enter, approximately where to take your entries, where to put your stop loss, where to put your take profit. But the only way you will learn is by applying. So the more you apply, صح? The more you apply, the more you learn. The more trades you take, the more you learn. There's a fundamental difference though between a demo account and a real account. So I do push people. I am not affiliated to no broker. I do not win any money from doing that at all. But I just advise people, you can start a few months to like test, try, play with demo accounts. But the real deal is when you're gonna put your own money, real money, in a live account, even if it's $10, even if it's $100, and I think everybody can put $10 in a brokerage account to at least start trading, and they will manage the risk by percentages. So let's say if I'm mentoring a guy that has $10,000 to invest and a guy that has $10 to invest, right? Very different kind of buckets, very different kind of bank accounts. So 10,000 versus $10, I'm basically mentoring them the same way because I'm talking percentages. So if the $10,000 guy wants to risk, does not want to reach a downside or a drawdown of 10%, and the other guy don't want to reach 10% either, on one side is going to be 1,000, on the other side is going to be $1. It's the same thing. So I'm going to mentor them the same way. However, this is what's going to change. The lot size they're going to risk, the percentage they're going to risk per trade is going to be the same. The lot size is going to be different because of capital difference, but the percentage they're going to risk per trade is going to be the same. So if they tell me, if I basically mentor them, I analyze their, level, skills, competence, and we give ourselves, for example, 3 months, that would be, let's say, 20, 30 trades, right? That means they have 30 trades to practice consciously, to execute consistently, and in the right way their own strategy. So they have 30 trades, and even though they will basically have 30 losses on these 30 trades, they shouldn't reach 10%. It's basic mathematics. You just divide 30 trades, 10%, how much should I risk per trade, and you have your result. It's not that complicated, right? So the reality is that no matter how big your pocket is, you can learn. Now we're talking about learning. If we talk about making real money, now that's gonna take time. Real money is gonna take time. But capital management at the beginning is necessary no matter how much you have. And the more you're gonna practice with a very limited downside because you do it consciously, the more you're gonna create confidence, the more you're gonna, and because you're applying it the right way with managing your capital, managing your risk, and managing your trades and your money, you're gonna keep practicing the right behavior again and again and again and again. It's gonna be normal for you. What people do, they do it the wrong way, and then it's hard to come back to the right way of applying and executing their strategies with capital and risk management. But because you do it from the start and you manage your risk and your capital from the start, you're gonna build confidence, you're gonna build the right behavior, the right way of trading, and when you're gonna start leveraging, you're gonna do it smartly because you're gonna understand risk, you're gonna understand execution, you're gonna understand capital management. And this is key in trading because it's all about probabilities and risk probabilities and how to hedge it, right? So I think that was a very good talk. I think this is going to be very, very beneficial for all of you, whether no matter where you are in your trading journey. So keep that in mind, think about it, sleep on it, and I really want you to take that seriously because it's so important. So I'll see you in the next video.